Hey, what's going on? We're back today. We're going to be going over some more properties and underwriting. And as I've talked before in previous videos, my goal this year is to buy an apartment complex. Um, we have been looking at properties for a while now, at least I have, and have never done anything, but want to make it a goal of mine this year to buy an apartment complex, go in with some partners and investors, and start the portfolio of having multiple units, an apartment building, and then growing that over the next years into more properties, more units, and making everybody win, myself and our investors. So let's get going on looking at some properties. So we've been in like the 30 unit range, 16 to 30 units is where I'm looking at. So I have one today. I'm going to go a little bit out of that box. Um, just to show that myself, and if you're watching, that it doesn't matter the price range, it doesn't matter the number of units, it all depends on the underwriting for that is all the same. So this one is so this is how many units? Um, okay, so this isn't as many units as I thought, but this is 24 units. And they are asking $25 million. Okay, so that's what? About $1 million a unit. And they are saying the cap rate is 7.94%. So, as I've shown in previous videos, if we have the asking price and we have the cap rate, then we can figure out the NOI and we could figure out if this is going to work or not. So 25 million times 0.0794 gives us an NOI of 1.985. So this is telling me how much money they're making. So they're making about $2 million a year, income minus expenses, and that's what that number is. So let's take this number. Let's say we're going to need 30% down. 30% is 7.5 million. So that leaves us at 17 and a half. Oops. 25 million minus 17 and a half. Okay. We're going to multiply that by 0.065. So that's 1,037,000. So our debt. So to get our debt, we took this number minus our down payment, which is 17.5 million, divided by, or times 0.065, which is just a generic rate that I use for principal and interest payments. That's going to get our debt, which is 1,137,500. So this does work. This leaves you about 800,000. Whoops. 800,800 divided by 7.5. This is a, so this equals 10.6%. So this deal would work. The rents on these must be insane. This is down in Miami, Florida, so rents could be insane. But let's see if it says what our income is. So we just did the quick math, and we know that this is a, so they have a pro forma, which doesn't say what it's doing now, but so it looks like they're marketing this as like a condo hotel type deal, which I wouldn't do. It's like short-term rental stuff, but it doesn't say an income, but if 25 million, 7.94%, it pencils out. We get our NOI, we get our debt. Here's our cash on cash. 10.6% with the debt. So as long as this number, your cap rate, is above the percentage of what you're paying for the debt. So in this case, it was 6.5%. If this number is above that number, it usually is a good deal. If it's below it, it's not to say that it's not a good deal, but the cash on cash and the actual percentage may be lower. So this isn't a bad deal on paper. We just have to get more in depth on it. It looks like a short-term rental condo type place. Let's take a look at this one. This is the units are, I think this said 29 units. Get this off real quick. Okay, this is 29 units, 6.36 cap rate. 29 units, 6.36% cap. Okay, so off the bat, I use a 6.5% 6% for my debt. So I know this is going to be a little bit lower probably of a cash flow deal. They are asking 5.6 million. Okay. So we're going to do so this is income. This is debt. This is expenses. And this is the cash on cash. So let's see, we can fill in, one of these, and we're going to get our down, and we're going to get our NOI. Okay, so 5.6 million times 0.25, that's our down payment, 1.4 million. Is 4.2 million left over divided by 0.065. Our debt is going to be 273,000. So if we take this purchase price times the cap rate, we're going to know right away if this is a deal or not. Times 0.0636, 356 NOI. So that's 80,000 left over. $80,000. We're going to take the 80,000, which is the NOI minus the debt, 80,000 divided by our down payment is 5.7%. Now this is lower because this cap rate is less than our debt number, 6.5%. Or it could be that the expenses are too high, the income is not enough, maybe it's not full. Yep, occupancy is 83%. So you get the occupancy up, you can bring this NOI up, and this number goes up automatically without any additional expenses. Let's see what the income is. Now, once you find out if you like this deal, then you got to figure out, is the location good? Do you like the location? Do you like the property? Okay. Because you're going to have this thing. You're going to have this thing for a long time. At least I plan on having it for a long time. I don't want to buy them, up the rents, and flip it into something else. I mean, that would be great. What I'd love to do is refinance it, take money out of it, still own it, keep it, and then use that money to buy other properties. Is what I really want to do. I don't want to sell them as long as they're cash flowing, unless the offer is just so good that it makes sense to do it. I'm looking for the income. These units look updated. This is in Florida. So we know the weather's probably good. I hate how they keep this all the way down. All right, so they have total expenses at 228. Let's see, 229. Debt, or I mean, our NOI is 356. So that means the income is effective gross income 584. So let's just do some quick math. 584 divided by 29. Oops. Divided by 12, divided by 29, 1,600. So rents are pretty decent. So here's the income, here's the expenses, here's our NOI. We get our debt, cash on cash, 80,000 for 5.7%. So let's say this is at 80. So they're 83% times 0.83. So 5 units. So let's say they're getting $1,500 a unit. 1,500 times 5 equals 7,500 times 12 is 90,000. So let's say this is 674. Okay, this would be at 83% occupancy, and this is at 100%. So let's say we got it to 100%. Okay, this is our new income. Let's say our expenses do go up. Let's say 5 units. Let's say it goes up $1,000 a year. Let's say it goes to 229 plus 5,000. Let's say this goes up to 235. Okay. Which it could. Electricity, trash, repairs, who knows? So 674 minus 235. So that's an NOI of 439. Minus our debt, 273. 166. This doubles. Divided by 14. 11.8. This is what you're looking for. A value add. They're at 80% occupancy. To get to 100%, you get 80,000 more in NOI. Your expenses go up a little bit. I'm sorry, in income. Your NOI goes up 80,000, but your cash on cash return doubles. Now, if you hold now at, so that if you increased occupancy, not even increase rents. So your 1,500 times 5 times 12, 90,000 divided by their cap rate, 0.0636, 1.4. You added 1.4 of value by getting this to 100% occupancy. So let's say you got it to 100% occupancy. Okay. And you went to the bank and said, look, here's my new NOI. So 439 divided by 0.0636 is 6.9. So about $1.3 million. So now you have a 6.9 million property. So you go, this is what I was talking about. Instead of selling it, go to the bank and refinance it. So if you increase this NOI, get it fully occupied, I can go back to the bank. I can say, look, I got 6.9 million. So what do we owe? 5.6 minus 1.4. So a million would be 4.6. So 4.2. So we owe 4.2 million. This is what's exciting about real estate, especially these multifamily deals. So we owe 4.2 million. So now we go to the bank and now we owe 6.9 is our new value based on the new NOI, by getting it to 100% occupancy. Okay, times 0.25, or 6.9 times 0.75. Okay, so now we go get a new loan for 5 million instead of the 4.2. Uh, 6.9 times 0.75 equals minus the 4.2. 975,000. So we get a new loan for 6.9. We put our money down, pay some fees. Now we get a loan for 5 million. We owe 4.2. We pay this off. We got $975,000 left. Now we take this money, go get another deal. We still own this deal. That now our debt is going to change. So let's say 500 times 0.065. So now our debt is 334, but we're still making 439. So we still, now we make 100,000. But we're still making more at 80%. This drops, but now we got $1 million tax free because it's debt. We're not selling the property. We take this, we go buy another property. We're still making $100,000 and we still own the property. And we did not raise rents. All we did was get it from 83% to 100% occupancy. This is actually a pretty good deal, especially if you can get it to 80, 100%. So they're saying on this, there's an assumable loan. Let's see what that says. Loan amount, 4 years. So in 6 years, you'd have to refi the loan because they're saying that's what's owed on it. They don't say the amount though. Anyway, it's pretty close to what we said. 4.2 at 6.5%. They're saying 6.36%. So this is pretty close. This number. It's still making money at 83%. This is a good deal. I'm going to save this one. So yeah, this is how you really make money. This is why this is exciting for me. It is 29 units, 5.6 million, a 6.3 cap. Here's our NOI, it's 356, and that's at 83% occupancy. I'll have to double check that, but let's assume it is because that's what they're saying the current numbers are in the occupancy. So if you can get it to 100% occupancy, you increase the value to 6.9. You increase your NOI. You increase your cash flow and your percentage. Then you go to the bank, you refinance it. You take $1 million out of it. You reduce your cash flow a little bit, increase your debt, but your NOI stays the same. And if you increase rents, that's even more money. So this is what's great, because you can still own it, take money out of it, go buy something else. This $1 million can get us another down payment, $1.4 million for $5.6 million. So if it's $3 million or $3 million, we can probably get a down payment 30 to 25%. We can get a $3 or $4 million property with this 975. That's another 20 to 30 units from what we've been looking at so far. Here's one 32 unit. We'll look at this one as well. So now we have $975,000. Let's see. And we are going to take that money. We are going to go get another property. Let's see what we can buy. So we have $975,000. We have 29 units. Okay. And we have 100,000. Well, we have 100,000 in cash flow. And we have a property worth $6.9 million, 29 units. And we haven't even raised the rents. Okay. So now we're going to go find another property. Let's see this one. This is, they're asking, it's 32 units. They're asking 2,875. So right off the bat, we know that these rents are a lot smaller than what we were dealing with on that last property. If this asking price is this for 32 units, so based on that, we know the rents are lower. It's possibly in a lower income area or a area that's not as good. A different part of town where it's not as good. And now it could be less expenses, not as much market rent. This is saying it's C class, which makes sense based on the price and the units. This one over here was an A class. So they're saying the cap rate is 6%. Okay. So 2,875 times 0.06 is 172. So our purchase price of 2,875, 6%. That's an NOI of 172,500. So let's say we put down 25%. So our debt is going to be 140, 156, 32,000 cash on cash. About a 4.2%. So this is a good unit deal with a lower price. So we know the income's lower. It's a C-class property. It's not in the best area, which is going to make our margin smaller. The cap rate here is less than our 0.065% debt number, which is going to make this smaller. So the more deals you look at, you are going to know these things right off the bat when just looking at the couple pieces of information. Occupancy, it does not say. So it's saying the value add is to renovate units and increase rents. Doesn't sound like the prior owner has done that. So the current average rent is $745 plus $60. So let's call it $800. Okay, but they're saying they can get 900. So right now they're getting 32 times 800, 25 times 12. So the income is 307. So let's say times point, let's say 3. So 30% down on this is 862,000. We have 975. So that is plenty of money to put down on this. Okay? And let's say, so we have, let's say 100,000 left. 100,000 divided by 32 is $3,000. So let's say we took our 975, we put down payment of 30% on this, and we spent $3,000 and renovated each unit. So let's say we can get rents. They say a pro forma rent is say $1,200. So let's say we can get $1,200 of rent by renovating all the units, putting our money down. Okay? So if they're saying this is their income, 307, 307 minus 172. So expenses are about 134 divided by 7. Okay. So this is about 40% of their income, which I would do it by that. So let's say we got the rents to $1,200 times 32 times 12. That would be $460. Okay? It's $160,000 more of income minus our expenses. Now our NOI increases to 326 minus our debt. This is 185,000 divided by the divided by 975. 19%. So this debt actually is going to be higher because I did it based on 25%. So let's do 2875 minus 850,000 is 22,025 divided by 0.065. Actually, it goes down. Sorry, we're putting more down. So let's keep it at that. So if we took our 975, we put 850 down, we spent the extra money to renovate these 32 units. Okay, that would increase our income to 460 because now we're getting $1,200 instead of $800. Our NOI goes up to 326, and our cash on cash is 185. So let's see, what do we have now? So now we don't have any money, but now we have 29 plus 32, 30 is 60, 61 units. And we have 185, 285,000 in cash flow. Now you do this again. So you bought it at this price and this NOI. Now our income is 460 times 0.06. Sorry, divided by 0.06. 7.6. Okay, so now we got a property worth 7.6. This is the real magic of this. Now, what do we have? 22 million. Now we do 76 times 0.3. Let's just say. Whoops. 76 times 0.7 is 5.3 minus 225. Now we take out 3,295. So this is cash. Okay. Now our debt is going to go up a little bit. 76 times 0.7 times 0.065. Our debt goes up to 345. But we're still getting 460. So it's 120,000. So this goes down to 120. So now we have, so this goes to 120. So it'll be $220,000 in cash flow. And instead of 975, now we have 3.295. What kind of deal can we get for this? Times 3, 9 million. Now we're buying a $9 million property, not a 2875. So now you're talking 100 units. 80 units. So now 61 goes to 160 real quick. That's the play on this deal. So that initial, what was it, 750, I think, to put down, has turned into 3.2. Now you pay all your investors back. So all the money that we put in, pay them all back Nobody's in any deals for any money. Take our 975 and the 750. So let's say $2 million. You still got $1.2 million in the bank, and nobody's in the deals with any money. And you're cash flowing 220. This is a great deal. So this is how to use the cap rate to find out what your NOI is, and then use the NOI to find out what your purchase price is. If you can increase NOI, you're going to increase the value of the property. And as you do that, that's how you pull cash out, buy other deals, and just keep stacking and stacking and stacking on top of each other. Now the units, 1 to 4 units and the single families, you can't do this the same way because that's based on comparable properties. Because these are 5 and up, commercial units, the values are affected by the income. It's like a business. The more NOI, net operating income that you make, the more valuable the business is going to be. That's all these bigger properties are. They're just businesses. And if you increase the income, expenses, even if they go up, they're not going to go up as fast as the income, or they shouldn't. Hopefully, you increase your NOI, you increase the value of the property, then you can go to the bank, refinance it, don't sell it, still pull money out, and then go buy other assets. This is a good deal. As always, I'm looking at deals all the time. I review them on this videos and this channel once a week and just throw them up on YouTube. So take a look there. Subscribe to the channel if you're interested in real estate investing, specifically apartments, multifamily apartments. I'm going to be buying a deal this year. If you want to look at a deal that you have or you're interested in getting involved and going over deals, be happy to talk to you. I love talking about this stuff and reviewing deals and looking at them and looking at the numbers and then hopefully finding one that works, getting some investors in and buying properties and starting a portfolio. Thanks for watching the video. Subscribe. Send me a message if you want to look at deals and talk about deals. I'm more than happy.